We are here at the Market Domination Talk Show. I am your host, Seth Greene, and I'm fortunate enough to be joined today by Tom Larsen of Larsen Insurance. Tom, welcome to the show.
Thank you. Thanks for having me.
You are very welcome. Now, I know that you call yourself an independent insurance broker,
right,
as opposed to what everybody else calls themselves. Why do you call yourself that? What do you mean by that?
Well, most other companies, like you see advertised heavily on TV, they only represent one company. And so the people on there, or the people that answer their phones, are agents for insurance companies. We're brokers, so we represent lots of different insurance companies.
So if, for example, not to throw anybody under the bus, but if I were to call Geico, the Geico rep obviously can't get me a policy anywhere else but Geico. That's what
correct.
You're saying? They're
That's correct.
held captive, so
That's
to speak,
correct.
to that company.
That's correct.
And why is it important that I be able to have more than one company?
We shop your insurance for you. So we go out into the marketplace and actually rate you with all these different companies. And there's so many variables, between where you live and if you're a homeowner and what your credit's like and what your motor vehicle's like and what kind of cars you drive. There's just so many variables that for auto insurance, for example, the rates just can be all over the board from company to company.
So you just said something really interesting that I didn't know. You mentioned credit. So does my credit affect my insurance rates?
Yes, it does.
Can you tell me more about that? Because I personally don't get why, if I have a whole bunch of debt, why they would charge me more to insure my car.
There's been study after study after study done that proves that people with good credit put in less claims and are supposedly better drivers. And there's been studies done by just about every insurance company out there that proves that. So they don't actually pull your credit report. They actually get a credit score that gets plugged into their
So it doesn't
algorithm.
affect my credit for them?
No,
they're not doing an inquiry or something?
No, not at all.
Okay.
Not at all. Doesn't show up anywhere on your credit.
Okay, so then if all of those factors go into creating a price, and that price is vastly different at different insurance companies, why does it vary so much?
Again, it depends on whether you had a little incident, whether it be a fender bender, put in a glass claim, had a speeding ticket, live in a certain zip code. I mean, it's all over the board.
So every company evaluates risk differently?
Yes.
And prices it differently?
Yes.
Is there any way to determine what the right answer is?
No, because again, it goes into a big algorithm where, you plug the information in, and some companies, use the fact that you live in a $300,000 house, more heavily than credit. Some companies use credit more heavily. Some use your zip code where you live more heavily. So they're all over the board as far as how they use the factor and what factor is the weighted one for them.
So insurance company A, my home value might count more, whereas insurance company B, my credit card score might matter more.
That's correct.
That's why they come up with all those different prices. And
That's correct.
Okay.
Yes, that's
so
correct.
How do you actually quote something? I mean, how do you quote my auto or home?
Well, we as an independent broker, we have a proprietary system that we plug your information in just one time, and all of a sudden we get the rates for Travelers and Hartford and Progressive, New York Central Mutual, Hanover, Kemper, New York Central Mutual. All the rates show up on our screen, and then we can go into their website to just confirm the rate that we got back from the system that we use.
So, I mean, that's pretty amazing. So you're able to search the entire, it's almost like, let's say, a travel website like Kayak that gets you don't have to go to the US Air website and get a ticket on just US Air and then go to JetBlue and then go to Southwest. Kayak is search one and done, and they give you the prices on all the tickets on all the airlines. You're almost serving that same purpose.
That's correct. And for the consumers out there, if a consumer tries to do it on their own, they're doing what you just said. They're going to
Geico, and then they're going to Progressive,
then they're going to
Esurance.
Exactly.
Okay, so you could really save us a whole lot of time and probably money.
Oh yeah.
Why, if I can get 20 different companies through you, and I'm certainly not going on to 20 different sites and filling out the same information 20 times.
Correct.
It almost wouldn't make any sense to go just to one plain old insurance company. It seems like everybody should use a broker.
I think so.
Well, you're biased. Right. What about, I know I've heard you talk before about the importance of having a personal umbrella policy. What is that? Why is it important?
Well, it goes over everything you own. So let's say that, let's say you bought a boat, or you're a snowmobiler in the winter now. The personal umbrella not only goes over your auto and your home, but it goes over the other things that you own, like in my example here. But what's important is that, I know you have kids, right?
3.
So, if you're, I think your son's playing Little League ball. So
I am the coach of his soccer team, and sometimes we might take other kids with us to soccer.
Perfect example. So you get in an accident when you're driving him and, 4 of his buddies, and, what's screaming on TV all day, every day, but these attorneys looking to sue people.
Right.
And, one of the kids' parents gets a hold of one of these attorneys, there's a possibility of a lawsuit and coming after you and, trying to get some money out of your insurance company. So in that example, the personal umbrella policy would help you as far as defending you. Or if you do volunteer work.
Yep, my wife is on the board of a number of school.
On the board of directors. And a big one is if you get a dog. People don't think, well, I got a dog or a puppy and, all's well and good. Well, probably 64% of lawsuits against people, homeowners, is because of dog bites.
Wow, 64%.
Yeah.
I know you've had I know this is a personal passion of yours. You had an incident with this. Can you do you mind sharing?
No, actually, too. When my daughter was 8 years old, she got bit on the face by a dog, and so we didn't really pursue a lawsuit because they were friends of mine, but we put the insurance company on notice, and we ended up settling with them over her facial scar. And then a year and a half ago, my 88-year-old dad got part of his thumb got bit off by the next door neighbor's dog, that they were dog sitting by the neighbors, new neighbors too, that he didn't really know the dogs, but they were babysitting the dogs when they went to a wedding on a Saturday night. And so he had part of his thumb taken off by a dog next door.
Wow. So if you have a dog, obviously your insurance company needs to know about that so they can protect you for it.
That's correct, but you also should raise your liability limits on your homeowner's policy.
To cover the event that a dog might bite somebody, even if he's the best dog in the world.
Right.
Sometimes things happen.
Right, exactly.
And if, let's say, someone like my wife was considering getting a dog, should we call the insurance company beforehand and find out how much are our rates going to go up based on the type of dog she gets? Or are you the first phone call I make when she comes home with one and surprises me somehow?
Your rates won't go up, first of all.
That's good to know.
Just because you get a dog. But you should probably raise your liability limits on your homeowners, which will cost you $25 a year, $30 a year. But every insurance company out there has, and I don't mean to sound funny, but they have a hot dog list. Not a hot dog that you eat, but they have a hot dog list, and it's like Akitas, Rottweilers, Pit Bulls.
The more aggressive breeds.
Yeah, there's about 7 of them on there that most insurance companies, if they know you got one of these dogs, they would probably cancel your insurance.
Wow.
Yes.
So that would be very important to know as a consumer what dog not to get, hypothetically.
Right. Exactly.
Not that you make that choice solely based on insurance, but you might want to think about it.
Right. True. Very true.
So is there a setup where if I have a dog already, is there a chance that if I have a dog already and I don't tell you and it bites somebody, that you won't cover it because you didn't know?
No, but we had a situation, and it's one of the reasons why I fired this particular insurance company. I fired 2, by the way. I told them to rip up their contract and leave my office. We had an incident where a dog bit the postman, and on every homeowner application, there's a dog questionnaire. And we had done business with these new clients via mail, so we didn't actually physically sit down with them, but they had checked no on the dog question when they really did have a dog. And so even though they checked no, it should have been covered in my mind, and the company should have represented them. But what happened was the insurance company turned around, and this was like 2 years later, mailed the client their money back for the 2 years of premium and said, you never had a policy with us, here's your money back. We're not representing you in this dog claim. And that was one of the reasons why I fired this particular insurance company, because what they did was absolutely wrong. They should have never done that.
So would that personal umbrella liability policy cover me if my dog did something?
Yes, absolutely.
And it would cover,
yes.
Let's say I was insured for $300,000 and I got sued for $1 million. The extra $700,000, if I lost, would come out of the personal liability umbrella policy.
That's correct.
Does the personal umbrella policy also cover my business?
No, it does not.
So
you need separate business liability protection for all the business risks that you are involved with currently. The personal umbrella is just that personal. It goes over your cars and your home and that type of thing. So,
speaking of business, is there any type of business you specialize in working with your agency?
We do. We're real heavily involved in the landlord community, and landlords are one of our specialties that we happen to write a lot of them, actually over 118 of them, mostly in Buffalo and Erie County and in Niagara County too, but we go as far away as Albany and Poughkeepsie and Syracuse, Rochester, so we have landlords really throughout the whole state of New York.
So that's, I buy rental property, you're insuring me as the landlord against whatever my tenants hypothetically might do.
Right, exactly. A big one there, again, this time of year is slip and falls. People don't shovel their sidewalk, or, even if they do and it ices up or whatever, people slip and fall. That's a big one. Even, slipping and falling with somebody mopping the floor and having a wet floor, and, those type of things happen. So I would say in the business policy area, slip and fall is probably the biggest lawsuit that we see.
Who insures that type of risk?
Lots of different companies. Like we have Hartford, for example, but Hartford doesn't do anything with apartments. We have some strip plazas that are with Hartford because in New York State, probably because of New York City, they don't want to insure apartment buildings or apartments. But yet down the street, right down Sheridan Drive here, we have Little Erie Niagara Insurance Company that we represent, and they love apartments and they write apartments all day long. So they're a nice little company for us to be able to put our apartment risk with.
What if it was not just an apartment type of building? Like what if it had more than one use?
That we call that mixed use, and mixed use building, for those that don't know, is like stores on the bottom and apartments above. And we do those with a lot of different companies. We have probably, 12 companies that'll write those type of risks.
And is that also similar? You mentioned there's a vast price difference between what personal insurance companies cover one person's home versus the other company. Is it vary that much on the commercial side as well?
Oh yeah, it definitely does. For example, we insure a 16-unit building. It's actually on Elmwood Avenue, downtown, close to downtown, and they're just in the middle of selling it. So we're re-shopping it for the new buyers. But, he's getting quotes from, and he's not a client right now, but he's getting quotes from his broker, $16,000, $18,000, $20,000. And we have, and the building's worth $1 million. And we have two insurance companies that are coming in under $8,000
It's a huge difference.
Yeah, so.
What happens if, let's say, the landlord makes improvements to the property, or they make changes or they raise rents that increase the income?
Well, that's where they should be in communication with us, with their insurance broker, because if they make improvements, then definitely we got to increase the value of the building. But what I like about being in the landlord business and helping landlords is we can really affect their bottom line. And so if their net income for that particular building is better because we gave them a better insurance rate, then it makes their building more valuable. And so we can actually help affect the value of somebody's apartment building with putting their insurance with the correct company.
So that would, obviously, by enhancing my bottom line, make my apartment building more valuable, which makes me happy.
Right.
Right. Is there an issue or anything if there's a claim?
There could be, like in my prior example with the dog bite, we got rid of two insurance companies that I felt that weren't doing a good job on their claims, and one of them happened to be on a landlord too, and so we got rid of those two companies, and we refused to represent them anymore because you buy insurance to be able to be there when you do have a claim.
So it sounds like you get pretty involved in the claims process. It's not someone calling some 800 number.
No, we don't. We want them to call us because, for example, you have your gutters come down, do the buildup of ice, and you get a estimate, and it costs you $600 to fix it, and you got a $500 deductible. Well, you shouldn't be putting a claim in for that. That's not what insurance is for.
Right.
You want it for the big stuff, not for making $100 on fixing your gutters type of thing.
So you can really help someone manage what they're doing so that they make the right choice.
Right, yeah, we try to do that. We try to be a good manager for our people and say, call us when you have a claim before you go and call the insurance company, call us. So
what about, we're in Buffalo, so, and my kids are off of school today because it's too cold.
Right.
So obviously you've got issues with snow, and ice that you mentioned, slip and falls. What about serious loss? Like, let's say, what if someone had a fire?
I'll give you an example. That's the best way to describe it. We have again, another landlord, 3-unit building on Richmond Avenue in the Elmwood Village area, and he only wanted whatever the market value was for this building to insure it for. So in this example, or in this actual case, it was $240,000, which he felt was a true market value of the building. Well, the building to replace it would have been like $490,000.
Because between the time he bought it and now, obviously the cost to rebuild it has increased.
Right, exactly. So the cost to rebuild it would be like $490 because it's a big three-story building, but he only wanted the market value. So he ended up having a loss. His one tenant overdid an electrical cord, had too many plugs in there and started a fire. And we ended up helping him out in the claim, and he ended up getting paid $177,000 on this loss that included loss of income too, loss of rents for the people moving out and that type of thing. So we helped him out there where he almost got the whole value of the insurance policy because it was written at $240 and he got paid $177,000 and put the building back together. And he still owns a 3-unit building.
That's great.
So, yeah.
What are some of the most common mistakes you see people making when they're shopping their insurance?
Just calling like one company or just dealing with one company. A lot I see is somebody still dealing with the same company for 10, 12, 15 years. And insurance is so different today that even 3 years ago, it's just so different. How insurance companies have changed over the years.
And you certainly, their companies Allstate's never going to call you and say, hey, guess what? We should be charging you less. Or
no, because in that case, they only offer that one product, their product. So they can't turn around and shop the market. Where what we do in my agency, like you just mentioned Allstate, so let's just stay with that and say, for example, auto insurance. If somebody's renewal comes up and we see that it goes up $300, well, we're shopping it automatically for them. So we're automatically being proactive instead of calling them up and saying, hey, do you want us to do this? We automatically do it.
So you're really on my side, in essence, as a consumer, trying to make sure I have the best coverage at the best price on a regular basis.
We try and be proactive, yes. Yeah.
So for those folks who want to get in touch with you, what's the best way for
They can call my office, 716-684-3203.
I know you've got a separate website just for landlords. Is that
just for landlords? It's nypropertyinsurance.com, and that's just strictly our landlord website. Or they can reach me via email, tom@larseninsurance.com.
Okay. Thanks so much for being here.